are prepared to break the silence. I'll be out in the sunshine, running beside the lion. I've been feeling down.
Hello, welcome back to WINFXTRADING YouTube channel, the only channel that has been optimized to make you rich trading the forex synthetic market. If this is your first time of this team and YouTube channel, do your best to subscribe and turn on the bell notifications so you get notified each time I upload a new content. Try to like and refer the channel to your network so that YouTube pushes to a higher level of audience. Okay, today we talk about supremacy of lows and highs in forex synthetic market. Okay, this topic gonna change the way you approach price action and the way you actually try to enter the trend or trade against the trend. In reality, when you trade against trend, you really don't want to do that, but you find yourself doing that simply because you don't know about this topic, right? So I'm gonna read the document and make sure you watch the video to the very end, and be proactive. Subscribe to our VIP channels to get optimal profit, steady withdrawals. Enroll for our courses to be fully educated and get our mentorship to assimilate what the market is all about, right? The lows and highs have such sync relationship. The lows and highs have such sync relationship. Every low creates a high, okay, and vice versa. Every low creates a high and vice versa. That is, every high creates a low. Okay. At higher time frames, you can see major highs and lows, while at lower time frame, you can see minor lows and highs. These highs, okay, these highs and lows are determining factors of change of strengths, measures or minus change of trend, measure or minor change of trend. Okay, it's going to be a very short video, but this is very powerful, and a lot of people are losing money because they have psychological problem which is subject to these ideas. And I'm gonna go deep into this on the MT5 right now. Let's go there. Okay, right now this is USD, and today is Sunday and the market is closed, and so we have to actually have experience of static price action where the price is not changing, but that doesn't prevent the analysis. You're gonna analyze this based on the past price movements. So this is 4-hour time frame. It's good when you are trying to do analysis, you do your top-down analysis. But right here, I'm not doing top-down analysis, but I'm just selecting a particular time frame just to teach you what I'm presenting. But as a real trader that wanna get steady profit, top-down analysis is very important to know what you're doing, to know where the market is heading to and where it's coming from, right? So we're talking about highs and lows, the supremacy, the power, the authoritative characteristics of these highs and lows, you know, how it moves the market, right? So we have a turning point here. These are turning point. Highs and lows are turning point. We have a turning point. This is 4-hour time frame. So the price pulled down, reach this low. This is the lowest price that it can attain. This is the minimum price. So it's the low, okay? It reached that low and push high. Okay, so we can say that this is absolutely buy point. This is absolute buy point, and this is absolute sell point. Mathematically, it's very hard to know the absolute buy point and absolute sell point. Though in future I can develop a content for that using mathematical ideas and formulas to know where you can actually see an absolute buy and absolute sell. Okay, but this is not what I'm teaching. I'm talking about lows and high. When it does happen, it has already happened. So I'm not trying to show you that when you know, I'm trying to tell you how you are going to deploy your knowledge base of previous lows and highs so that you can be able to know where the market is heading in future. And so right here, this is the low. So in the document I said a low must create a high, so this is a high, okay, and a high must create a low. Is a simple knowledge base you have to know. Even a robot will understand this, okay. I mean non-human intelligent robot, that's the AI, that have monitored the price movement. We always know that every high will create a low. That's what I'm trying to say, okay. So every high creates a low, okay, at different time frame. But I pretty much want to consider the ones at higher time frame so that we will be getting the best ideas, right? We'll get the truth, right? So I'm marking the lows and the high. Those triangles, those rectangles are at the top represent the high, the ones at the bottom represent the low. Okay, so every high need to create a low. So there is no way you understand this and then you will not be able to understand price movement perfectly. So this is a high, and then it must create a low, okay. So one of the biggest problem here is to know when to get an absolute high and absolute low is a very big problem. To know which one is absolute low and which one is absolute high, that is where can a high be created, at which price will a high be created, at which price will a low be created. I think the general rule of thumb is this: if you have marked your lows and high, like mark as much as you can at measure higher time frame, and then if this is in such a way that the market is making higher highs and higher lows, then you look for buy. And if the market is making lower lows, lower highs and lower low, and then lower highs and lower low, you look for sell, okay. So that is general rule of thumb. But what I'm trying to teach here is how this affects change of trend, okay. How it affects change of trend is very, very important, because it is change of trend that makes a lot of traders lose money. How it affects change of trend, okay. So you see that 𝒓𝒊𝒔𝒆 hit this point and created a low. On creating this low, it went ahead and created a high, and then that high created this low, okay. It first of all created this low and then drop to create equal low, okay. It then drop to create equal low. So when there are equal potential swing lows or high, equal potential low or equal potential high, and you're able to understand the sequence of the highs and low, you can be able to actually enter that market, okay. So what I'm trying to say, we have a low here and we have another low here, and this is the high, because this low is higher than this low. The next low that is coming closer to this low will be higher, and so there's no need to wait. So you enter the trade, and so what happened? Good. What happened? Good went up, okay. Good went up, okay, and then created a high and then created a low, and then you keep doing this. Now the main thing that I want to talk about is change of trend. It created this high, and this is the last high, and it's also an absolute high, because after that high there was no high created in this vicinity, and then it created this low and break out of this low. This is a sign of change of trend, and so what do? You wait for pullback and you sell 𝒓𝒊𝒔𝒆 back to a very strong demand zone, which is somewhere here. And what happened? Gold smash demand zone. Okay, right now we're back to synthetic market, and let's see what is happening in this market. This should be exactly 75 index. So some people will just be like, with this idea you are going to make it, you are going to succeed trading. When a video is released, when a content is created, the creator only focus on what he observed at that point. Market is a complex structure, it's a complex event that a single video cannot exactly say what is happening. It can say some, but not all. Okay, so in most cases you'll be like, oh, after I watch this video I'm going to go hard on the market, and then after you start losing. That is not how it is done. You have to be proactive. You have to copy and paste our trade and make money first before you can go on your own. It works, but you need other stuff to know. It's a daily lifestyle. Trading is a culture. You need to get that culture, right? And you keep learning. You need to be discipled. It's not something you just watch one video and start, okay? So let's continue. So we have this low creates this high, and market break out of it, and then start creating subsequent lows and high. So in this type of stuff, this is trying to tell you that the market have changed. It have changed trend. Unlike when it was creating this high, but this time around it is a lower high. Okay, they're not the same thing. So when it was going like this, it's just coming down, so it is trending down. It depends on what you know as trend. Here I'm trying to explain trend based on immediate parts, based on the immediate part. I don't want to relate trend based on multiple parts. No, I'm focusing on this part, and I'm actually believing that it is this part that absolutely control this market. With my risk management, even if the part is going to change direction, I must have made a lot of money following that path, because that's what really works, right? So this market going up like this shows that I should look for buy, not sell. I don't care about whatever that might have wanted to change the trend. Let it change. If the trend change, then I will follow the new trend. But if it haven't changed, this part is going to keep buying to infinity. This part is going to keep going up to infinity. Okay, so that's cool. So when market are making highs and lows, and you understand the sequence of those highs and lows, whether higher high or like whether it is in a sequence of higher highs, higher low, or lower highs, lower low, you'll be able to know what you are doing. If it is higher high, higher low, you buy, you look for buy. If it is lower low, lower highs, you look for sell. Okay, but this idea of equipotential swing, like equal lows or equal high, that if market is going up and you actually want to buy the market near an equal low, okay, so you want a price to come to a low that has been created already, not necessarily touching that low, but maybe near to that low, so that the difference is not much. You can buy this market. The same thing when the market is actually selling, you are looking for a high, but then equal high, not necessarily touching, but near the previous high, and then you want to sell this market. Okay, that's good. Make sure you're proactive and make sure you do the right thing. Invest in your self-development as a trader. There are a lot of things that can make you lose money even when you follow this video. Let me give you an instance. Okay, you see, along this path, this market was making high, but suddenly this high couldn't create another high. Rather, it creates a lower low. It changed the trend. It takes deep level structural analysis to know that the market is going to change trend like this, and it might be overconfidence and over belief, and that day or that point in time you want to invest $1 million and then automatically you lose your money. How will you feel? Are you going to come and say, the creator have misled you? No, you are doing it on your own. You have incomplete knowledge. You don't have the caution, trading caution. So that's cool. Thank you and bye for now.
If you're prepared to break the silence,